Hello, everyone. It's your favorite accounting professor, Dr. Trussell. It's good to talk to you again. I know that you've missed me since last semester in Intermediate Accounting 2, and we're moving on with Advanced Accounting. I just have a few little slides here to tell you about what's going to be happening during the semester, and I look forward to seeing you soon. The topics this semester, we're going to have one of the main topics we're going to have is consolidated financial statements. The idea of what happens when a company consolidates, which adds together financial statements of two or more different companies. And that's going to be covered in the first 4 chapters. Then we're going to skip a little bit and talk about foreign currency transactions, translations, and international financial reporting standards, better known as IFRS or IFRS, and those will be covered in chapters 9 through 11. Also in the textbook, we'll be covering chapters 14 and 15, which is partnership accounting. We've almost dealt exclusively with corporations in intermediate accounting, so we need to talk a little bit about what happens if you have a partnership rather than a corporation. And then finally, we're going to have an analysis of a financial report. So you'll see that we're covering 9 chapters in the book. So then when we finish the chapters, we're going to do some things that are outside of the textbook, and I'll be giving you some handouts and such, and that is looking at an actual financial report and analyzing it. Just to give you an idea of a consolidated financial statements, this is General Motors consolidated balance sheets, which means that they add together all of their subsidiaries, all of the companies that they own more than 50% are all added together. You'll also notice, by the way, that these numbers are all in millions, which means, for example, if you look at cash, that's not 15 million, that's 15 billion 238 million in cash. So that's a big company. But I just wanted to show you what we mean by consolidated balance sheets, how a company prepares these things, what we'll be doing in the first 4 chapters. And when they have a merger acquisition, they buy another company, they normally end up with goodwill. We talked about that back in Intermediate Accounting 1. So we'll be picking up and talking a little bit more about that in this course as well. And then here we have the consolidated income statement of General Motors, and you'll see something called equity income. That is what we're going to see in chapter 1, and all the chapters actually, but particularly chapter 1 and chapters 1 through 4, we're talking about what happens when we use this equity method, something that you might remember we talked about a little bit in Intermediate Accounting 2, and we're going to pick up there in chapter 1. And then also, what happens if you own less than 50% but more than 20%? You might remember talking a little bit about that too back in Intermediate Accounting 2. We have non-control, but we still are picking up part of their income. So we'll be talking about that in chapter 1. And then here's the consolidated statement of comprehensive income. And I wanted to show you this because you see the foreign currency translation adjustments, which we'll be talking about in chapter 9. So it actually has real world application, what we're going to be doing in this course, and I just wanted to show you where that comes from. What about the grade? We're going to have 2 exams, and those will be 100 points each. We're going to have 3 quizzes. What's going to be part of the grade? What's the content look like? Well, you have the exams and quizzes that are primarily problem solving and multiple choice, very similar to what we did in Intermediate Accounting 2, that style. The homework is going to be using Connect Accounting, just like we did in Intermediate 2. The class activities and participation, just like Intermediate 2, there are class activities that you complete before class, come to class, ready to discuss them. That will help you understand the chapters. If you don't do that, it's going to be very difficult to follow along in class. And then there'll be IRF cases, IFRS cases, two of them. The first one is how adopting IFRS would impact a company following US GAAP. So what you're going to do is going to get an actual company and say, if they were going to adopt IFRS, how would that impact them? And the second part of it is looking at a company that uses IFRS right now, so an international company, and say, how are they different from US-based standards? So check out the end of the syllabus for further instructions on that. And the last thing we're going to do is a financial analysis project. It's about the last third of the class. So you're going to be analyzing a U.S. publicly traded company, and you're going to make simulated investment and credit decisions. In other words, should you invest in this company? Should you loan money to this company? And you're going to be working in teams. The team you will all be looking at different companies, but within the same industry. Different companies, but within the same industry. So if I'm looking at General Motors, you might be looking at Ford. Okay, so you're going to be doing an individual analysis, but you'll be making decisions about which of the companies to invest in and which to loan to. The project has 6 individual analyses, 2 final decisions, that's the investment and credit decisions, and 1 presentation. The 6 analyses are due periodically, kind of like chapter assignments as we go along through the semester. But the final decisions and the presentations are due towards the end of the semester. What are you going to do for the first day of class? Well, make sure you read chapter 1 and complete the chapter 1 activities. We're going to be going right into them. And come to class prepared and excited. I'm excited. Are you excited? I look forward to seeing you soon.